All right, today we are diving deep into a stock that is absolutely, and I mean absolutely on fire. We're talking about SanDisk, ticker SNDK. It's on a tear that is pretty much everyone asking the same thing. Is this a legendary breakout in the making, or are we staring at a massive bubble that's about to pop? Well, we're going to dig into the technicals and see what they're telling us.
First things first, just look at this number. As of our source data, SanDisk is trading at a jaw-dropping $665.24. Now, this isn't just a high price. Oh no, this is the peak of a mountain after a truly explosive climb up the charts.
And how explosive was it? Well, the stock shot up over 15% in a single day. I mean, think about that. A lot of people would be thrilled to get that kind of return in a year. So yeah, when a stock this big makes a move like that, it gets everyone's attention, from you and me to the biggest funds on Wall Street.
Now, to really get the scale of this, check out this timeline. Just 60 days ago, back in early December, SanDisk was trading for about 194 bucks. Today, over 665. That's not just growth. The source material calls this a parabolic rise for a reason. The chart has gone almost completely vertical. And that, right there, brings us to the core question, doesn't it? Are we witnessing an unstoppable force that still has room to run? Or is this an immovable object, a bubble that's stretched so thin it's just waiting to burst? Because right now, the technical indicators are telling two completely different stories. So first, let's build the case for the bulls. Let's talk about the unstoppable force. These are all the signs that are screaming that this powerful trend is legit and could actually keep climbing. This chart really shows you just how far the current price has kind of run away from its own history. The 50-day average is way down there at $312. That means the stock is trading at more than double its recent baseline. This is exactly what analysts mean when they talk about a vertical trend, and it's a huge sign of incredible momentum.
So, who's doing all this buying? Well, this chart tells us the stock is trading at more than double its average daily volume. And according to our source, this isn't just random retail frenzy. No, this confirms that the huge price jump has massive institutional backing. The big money is piling in.
And you can see even more proof of that capital flow right here. You've got indicators like on-balance volume and the money flow index. They're basically designed to follow the smart money. And as you can see, both of them are flashing really strong signals. It confirms that a whole lot of capital is flowing into this stock, not cashing out. But here's the absolute linchpin for the bullish case. This number, 61.38. That's the stock's ADX, or average directional index. It just measures the raw strength of a trend. And listen to this. Anything over 50 is considered extremely strong. So at over 61, the trend for SanDisk is so powerful it might just be able to ignore the usual sell signals for a while longer. But that's only half the story. Now we have to flip the coin and look at the counter-argument, the immovable object. Let's look at the data that's flashing some serious red warning signs, telling us this rally might be on its last legs. Before we get to the numbers, let's quickly get on the same page with this term, overbought. It's pretty simple, really. It just means a stock has gone up too far, too fast, and is now statistically much more likely to fall back down, or at least take a breather. Okay, here we go. This is the stock's RSI, or Relative Strength Index. Now, a reading over 70 is considered the overbought warning zone. SanDisk is at a staggering 88.27. Our source material calls this critically overbought. It's a huge signal that a price correction might be coming and might be overdue.
You know, this quote just nails the situation perfectly. A stock with an RSI this high really is like a world-class sprinter. The power is incredible, it's impressive to watch, but deep down, that pace is impossible to keep up forever. At some point, exhaustion has to kick in.
And here's another big statistical red flag. This has to do with Bollinger Bands. They basically create a price channel where a stock should trade, about 90% of the time. Well, SanDisk isn't just touching the top of that channel, it has completely blown past it. Prices just don't stay outside these bands for long. They tend to snap back towards the average, just like a stretched rubber band.
And for our final warning sign, look how far the price has gotten from its own recent trend. The stock is currently trading almost 50% higher than where its own trend line would suggest it should be. Put simply, the price has just gotten way ahead of itself. The analysis says the stock is statistically expensive right now, even when you factor in its own amazing run.
Okay, so we've got an incredibly strong trend slamming into some critically overextended warning signs, an epic clash.
So what does the analysis say we should do with all this conflicting info? Let's put it all together and figure that out.
This slide just sums up the whole conflict perfectly, doesn't it? On one side, you have the unstoppable force, that extremely strong trend, massive institutional volume behind it, and a price that's just gone ballistic. And on the other side, the immovable object, critically overbought readings with the price stretched way beyond what statistics say is normal.
So how in the world do you navigate this kind of situation? Well, the source suggests breaking it down based on where you stand right now. The right strategy for someone who already owns the stock is going to be very different from someone thinking about jumping in today.
So here are the actual strategic levels. For anyone who's already in and riding this amazing wave, the analysis suggests setting up a safety net, a trailing stop loss, somewhere around that $608 support level, just to lock in those profits. But for new buyers, the advice is simple. Patience. Chasing a stock that's gone vertical is a very risky game. The suggestion is to wait for a pullback, a reversion to the mean, with a potentially safer place to get in down near the $524 mark.
And really, the big takeaway is this. The strength and momentum behind SanDisk right now are undeniable. You do not want to bet against a trend this powerful. But at the same time, the risk of a very sharp, very sudden pullback is also undeniable. It is a classic high-reward, high-risk situation.
Which leaves us with this final thought from the analysis. The data has given us a classic paradox, an unstoppable force of pure momentum meeting an immovable object of statistical exhaustion. And in the market, just like in physics, when those two things collide, something has to give. Thanks for tuning into this breakdown.